Missing a credit card payment can have significant and lasting effects on your financial health. Here's a comprehensive overview of what happens if you miss a credit card payment. 1. Late fees and penalties. When you miss a credit card payment, issuers typically impose a late fee. The first late fee can range from $25 to $40, depending on the issuer and your payment history. Subsequent late payments within a short period may result in higher fees. Additionally, many credit cards have a penalty APR clause. If you miss a payment by 60 days or more, the issuer may increase your interest rate to a penalty APR, which can be as high as 29.99%. 2. Impact on credit score. Your payment history accounts for 35% of your FICO credit score, making it the most significant factor in determining your score. If you miss a payment and it's reported to the credit bureaus, it can cause a substantial drop in your credit score. For instance, a 30-day late payment could lower a credit score of around 790 by as much as 80 points. Late payments can remain on your credit report for up to 7 years, affecting your ability to obtain new credit or loans. 3. Loss of grace period. Many credit cards offer a grace period, typically 21 to 25 days, during which you can pay your balance in full without incurring interest charges. Missing a payment can result in the loss of this grace period, meaning new purchases will accrue interest immediately. 4. Account delinquency and charge-off. If you fail to make a payment for 30 days, your account becomes delinquent. This status is reported to the credit bureaus and can negatively impact your credit score. After 180 days of non-payment, the issuer may charge off your account, meaning they consider the debt unlikely to be collected. However, you're still responsible for the debt, and it may be sold to a collection agency, which can further damage your credit score. 5. Potential legal actions. If your debt is sent to collections, the collection agency may take legal action to recover the owed amount. This can include filing a lawsuit, obtaining a judgment, and potentially garnishing your wages or placing liens on your property. 6. Difficulty in obtaining future credit. A history of missed payments can make it challenging to qualify for new credit cards, loans, or mortgages. Lenders may view you as a high-risk borrower and either deny your application or offer credit at higher interest rates. 7. Increased debt. Due to accrued interest, missing a payment can lead to the accrual of interest on your outstanding balance. If your account is subject to a penalty APR, the interest charges can accumulate rapidly, increasing your overall debt and making it more difficult to pay off. 8. Reduced credit limit. Some issuers may reduce your credit limit if you miss a payment. This can increase your credit utilization ratio, which may further negatively impact your credit score. 9. Loss of rewards and benefits. Credit cards often offer rewards programs, such as cashback or travel points. Missing a payment can result in the forfeiture of these rewards and benefits, diminishing the value of your card. Here are 3 additional paragraphs you can insert into your script to enhance its depth, value, and educational impact. These fit naturally into the existing flow and provide further insight into real-life consequences and preventative strategies. 11. Emotional and psychological stress. Financial difficulties due to missed credit card payments can also lead to emotional stress. The pressure of accumulating debt, declining credit scores, and aggressive collection efforts can cause anxiety, sleeplessness, and even depression. This emotional burden can affect your job performance, relationships, and overall well-being. Addressing missed payments early can help alleviate this stress before it escalates. 12. Effects on joint accounts and authorized users. If you're a primary account holder with authorized users, or if you share a joint account, your missed payment can affect others as well. For example, your missed payment may show up on the credit reports of any joint account holders, potentially damaging their credit scores too. This can strain personal or business relationships and complicate shared financial goals. It's important to communicate and ensure all users are aware of their responsibilities. 13. Long-term financial setbacks. Even a single missed payment can have long-lasting repercussions on your financial trajectory. Higher interest rates, damaged credit scores, and limited access to favorable financial products can hinder major life plans, such as buying a home, starting a business, or qualifying for student loans. Recovering from these setbacks takes time, consistent financial discipline, and a well-executed strategy. Taking proactive steps today helps safeguard your future financial opportunities. Absolutely. Here are 5 more educational and value-rich paragraphs to further extend your script. What happens if you miss a credit card payment? These blend seamlessly with the existing points and reinforce both practical understanding and actionable steps. 14. How credit card issuers handle repeated missed payments. Credit card issuers closely monitor your payment behavior. Repeated missed payments signal high risk and may result in serious consequences beyond late fees and penalty APRs. Some issuers may lower your credit limit, suspend your account, or even close it altogether. Once closed, the remaining balance becomes immediately due, and your credit utilization could spike, causing an even steeper drop in your credit score. 15. How it affects co-signed or secured credit cards. If you've co-signed a credit card or are using a secured credit card, a missed payment can impact more than just you. In the case of co-signed cards, the co-signer is equally responsible and their credit score may suffer. For secured cards, the issuer may use your security deposit to cover the missed payment, reducing or eliminating your available credit. Continued missed payments could lead to losing your deposit entirely and the closure of your account. 16. How to rebuild. After a missed payment. Rebuilding your credit after a missed payment takes time, but it's possible with consistent effort. Begin by making on-time payments going forward, ideally paying more than the minimum. Consider using tools like credit builder loans or secured cards to demonstrate positive behavior. Also, don't ignore your old debt. Consider negotiating with your issuer or a collection agency to settle or establish a repayment plan. 17. Credit card hardship programs. If you're facing financial hardship due to job loss, medical bills, or personal emergencies, many issuers offer hardship programs. These can temporarily reduce your interest rate, waive fees, or offer flexible payment plans. Reaching out before missing a payment gives you a better chance of being approved for assistance without damaging your credit. 18. Understanding your rights. Under the law, consumers are protected under laws such as the Fair Credit Reporting Act, FCRA, and the Fair Debt Collection Practices Act, FDCPA. These regulations ensure that you're treated fairly by lenders and debt collectors. For example, debt collectors must follow strict guidelines when contacting you, and you have the right to dispute any inaccurate information on your credit report. Educating yourself about these protections can help you make informed decisions and stand up for your financial rights. Steps to take if you miss a payment. Contact your issuer promptly. If you realize you've missed a payment, contact your credit card issuer immediately. They may offer assistance or waive late fees, especially if it's your first missed payment. Make the payment as soon as possible. Paying the missed amount promptly can help minimize penalties and prevent further damage to your credit score. Set up automatic payments. To avoid future missed payments, consider setting up automatic payments for at least the minimum payment due. Monitor your credit report. Regularly check your credit report to ensure that all information is accurate and to track any changes to your credit score. Seek credit counseling. If you're struggling with debt, consider seeking assistance from a certified credit counseling agency. They can help you develop a plan to manage your debt and improve your financial situation. Subscribe for more smart money tips that actually work. Don't miss out.